Good morning. All right. So this morning we got oil still ripping higher. Okay. Oil prices still ripping higher. The setup for the market looks pretty legit over the next 6 to 12 months. This is the biggest risk because it's going to push up inflation. We know this. We've talked about this multiple times. And if this is the case, then that CPI that comes out in August that will reflect July CPI is going to be a little hot. This was a big move, right? This was a pretty big move. Let's measure this move. I mean, we're looking at oils. Let me see, the beginning of July. We'll just have to look at the July price. Yeah, that was a pretty big move. So we're looking at a 15% move, 16% move, and it could go higher by the end. We got one. This is the last day, right? July 31st. So about a 16.5% move for July. That's going to push energy prices up. So I'm thinking core continues to fall on a year-over-year basis. We get core lower, and then headline might be a little sticky. So that might cause some turbulence. Now on the upside, on the upside, the leading indicators for oil to go higher are not rising. They're not going higher. The economy is still slowing down overall. It's not re-accelerating. It is bottoming out, but it's not completely re-accelerated. You need the manufacturing sector to really turn up to get a meaningful push in oil prices. Maybe I'm wrong. This is where I'm wrong, right? We are wrong, or I'm wrong above this 83.50 level. This has been the resistance level, or the biggest level for resistance over the past 6-12 months. So that's what we're looking at, that 83.50 level. We'll see. It's going to retest it from April. And if it gets rejected, good news. That means August, September. I think we go lower. September, we go into the back half of the year with headline inflation continuing to decelerate. Now, let's say we get above this. Yeah, we might be in trouble. So we're going to keep our eye on that. For the most part, we do have yields. Here's the other risk. We have yields still rising. Bond yields are on the rise. Okay, bond yields are a little bit on the rise. I'm going to go ahead and we'll keep it there. Right. So this is the cost of capital still tightening the market. We don't want to see this continue, even though the market is, even though rates are still high, the market is still doing pretty well. And I think that's going to come down to earnings season. So far, 80% of companies have beaten EPS estimates. We're above the 10-year and the 5-year averages for that. So that's not terrible. So my question is, do rates just stick around here? We might see rates for the first time actually just stick around 3 and 4. No, this isn't new. This is nothing new. We've seen this before, but typically you get a deceleration in rates. Typically things start to roll over at some point, but we're not seeing that yet. I really don't know. This has been a story that's had me by surprise, which is that rates continue to stick around this level, right? Rates continue to stick around this level. So now we're looking at we are looking at rates stick around. What level is this? This is pretty much a level that's been in place since, this is a 20-year level since 98. Okay, since 98. So that's the level we're at, 4.25, for the 10-year anyways, 4.25. So we used to trade around this level, but we've done it before. It slipped in 09. And I think really stocks can still do pretty well. Risk assets can still do pretty well with rates moving sideways. So if we get the rates move sideways and we get the dollar come down, which we've been waiting on, that's our big signal, is the dollar. It hasn't cracked yet. It did crack, but it came right back up. So we need the dollar to roll over. We need oil to roll over for this rally to really continue to keep its legs for the most part. I think you do need the dollar, though, to really roll over for this to be more sustainable. And if if oil does break out and move higher, if we get oil, above 90, I think the dollar comes right back up and sticks. So those are the risks that we are looking at. Those are risks right there, right? On the other hand, volatility right now, the market isn't really pricing that in as negative. Volatility is still pretty suppressed. We're at 1350. Anything above 15, 17, 20 is when vol starts to pick up. It's not picking up, so we're not seeing that. We're not getting volatility in Nasdaq either. It looks like it's going to roll over. Bond volatility non-existent. So it's a weird market. It's really neutral. It's really sideways when it comes to the macro. There's some forces that are helping us, some forces that are dragging us lower. But in general, it's going to come down to earnings season for this, for at least this quarter. And we're doing pretty well when it comes to earnings season. We did get SoFi beat this morning. SoFi had a big jump. So some of you guys, I know a lot of people like SoFi. They've been holding SoFi. SoFi just exploding. And I think too, the risk appetite is just going to outweigh some of these macro risks. Some of yields being elevated. I think the appetite for risk is back. It's back in the market. You see SoFi bidding up. And let me let's move this over here. Yeah, there we go. So you see SoFi bidding up aftermarket. There's a lot of people have jobs. There's cash on the sideline. Those money market funds, I believe. Where's that? There was a chart I had up here. Is it this one? Yeah, here we go. So this is money market funds. Check this out. Money market fund assets in general keep rising. We're at a record pace. $5.5 trillion. $5.5 trillion of cash on the sideline. Now, this doesn't mean all 5 trillion are going to go into the market, but as you can see back here in 08, right? Once the Fed cut rates, once the economy really started to catch its legs, which started with the manufacturing cycle. We're not there yet. We just got some PMI news today. All that cash starts to drain. It comes out of the money market funds and it goes sideways for a while at the low. So, I don't know where it sticks this time, but, depending on where the Fed keeps rates, the money market funds will drain to around that level, or at least the measured move. And there's a lot of cash, a lot of dry powder still there, and the dollar is going to give us that signal. So, and you're seeing that dry powder come out. SoFi is up big. You also have Palantir making a huge move also. Palantir starting to break out because the AI narrative and financial services in general, like you're getting a narrative come into the market. So narratives people think are negative, not at the beginning. Narratives can play themselves out, but I think we're still getting started here. So you get Palantir with the big move up. Roku also with some strength this morning. We have Roku breaking out, and that's probably being led by ARK, right? My guess is ARK is also moving high. Maybe not. Yeah, ARK is still bidding up. So you're getting risk coming to the market because the risks are pretty much disappearing. The only risk you really have at this point is oil prices, and that can be resolved pretty quickly with any type of extreme productivity. Okay, so oil prices, whatever, but we're getting equal weight. We're getting movements on the equal weighted averages, so there is market breadth coming in. Right, we broke above the previous high. IWM small caps are moving up, so you have a lot of strength in the market. The Dow finally started to slow down. The Dow was up for 13 days in a row, so you got the Dow starting to slow down a little bit. Credit versus treasuries is whatever, but also you got a bid in the bond market. The bond market is still bottoming out down there at that 98.50 for TLT. Those people are getting a 3.9% yield, right, on their bonds, on their government bonds. So as soon as the Fed kind of reverses course, these bonds should start making their way back up. And or if the economy weakens significantly, they'll move back up. So people are they're flushed with cash, right? What are we going to do with this cash? And real estate is set to continue to decelerate too. So who knows? We'll see how that plays out. But for the most part, we are seeing, a lot of reasons that this rally can continue. Big mega cap tech. Obviously, we want to see Apple's earnings. We want to see Amazon's earnings. Those are a big portion of earnings that are going to be coming out soon. And I think it's healthcare. Is it healthcare that's moving up a lot? Let's see. Yes, healthcare. Oh, healthcare is pulling back a little bit in the S&P equal weighted. So healthcare is pulling back, but healthcare is set to move up yet. It's been suppressed for a while. Yeah, it looks solid. The market is looking solid, right? Moving over to Bitcoin and crypto, it's very shaky. A lot of people calling for Bitcoin to roll over. What are the narratives? But it's still holding the trend. Bitcoin's still holding the trend. We'd have to really significantly break that trend and go back to 25K, where there's probably still more buyers. People, they believe BlackRock is going to get that ETF at some point, and they're going to front run that price, right? They're going to front run that price, and it's it's a lot of buyers down there. It could sell off to 25K. We could see that, right? Ethereum chugging along there. So nothing too insignificant, but definitely. And then Tesla, those of you guys who like Tesla, Tesla's still consolidating. It is struggling. Tesla's actually getting hit pretty hard at that 270 level, 265. It's not able to get there yet. We're still not able to get above that 265, 270 level. So I'm watching that. But we do have Teladoc. We do have Roku breaking out. Teladoc is trying to make a second move higher. So we'll definitely take a look at that. Waiting for Palantir earnings season. It hit. Yeah. Palantir should do well, man. Palantir is one of those names we've been strong on Palantir since 2021, right? It did dip significantly down to, it got down to, I think, $5.90 at some point. Now we're up at 19. A lot of strength there. Have you ever read the book I Swallow? No, I have not. I Swallow. No, I've never read that. Haven't read I Swallow. So, yeah, that's what we're looking at. Now, today's a little boring because there's not much going on, right? You don't have a whole lot of significant news, more manufacturing. So let's take a look at this manufacturing data. GDP, this is, the ECB. Oh, the ECB might be reversing too. They're starting to get a little more dovish now, which means Europe could be turning for the first time. Europe's been very negative. They got this morning, you did get the inflation rate for Europe, and the year over year is decelerating, right? So the Europe zone, or the European zone, is still decelerating. So this is positive, because once that global cycle starts to turn, it's going to leak into equities. It's going to, there's more demand for US equities than any other nation, right? And other nations, the Indian equities are up a lot. Japanese equities are up a lot. Mexican equities, or Mexico, I don't know how you want to phrase it, but global equities are up a lot. They're at all-time highs. A lot of them are at 52-week highs, right? So that'll trickle into the US. We know China is kind of slowing right now, and that should be good. Look at this month-on-month inflation, negative. So Euro area, negative inflation month over month. GDP starting to recover a little bit. So we're seeing really very slow progress happen on the global scale, for the business cycle to turn. We're seeing the business cycle turn. It takes time, but eventually it just starts to burst. Okay. This morning for the US, Chicago PMI. So business activity in the Chicago area, it's still below 50, right? Below, this is a 50 level. When you're below 50, you're still in recession territory. You're still contracting. So we still see more pain, which is why I don't think oil really has the juice to really just break out tremendously. It is breaking out though. On a technical basis, it is really strong. So maybe, we'll keep our eye on that. We're going to keep our eye on oil for sure. Now, Dallas Manufacturing Index, so going to the Dallas region, still negative, still very negative, right? Still in a recession. We're still in a manufacturing recession that hasn't changed. That keeps inflation expectations lower. We're seeing goods deflation in some areas. So there's deflation happening. This whole inflation fear will, I think, pretty much disappear pretty quickly as we head into, what is it, August, September, October. I think by October, it's pretty much over. I said by the end of the summer, shelter inflation should start coming unsticky, or should start unsticking itself. And we should see that play itself in our CPI over here in the US, right? So we're keeping an eye on that. Now, oil going higher does bring up headline a bit, but I think it rolls over, so we'll stay on that. But anyways, yeah, those are the only two readings we really had today. That's the only two readings. And if you jump over to India, right? This is India. Their manufacturing cycle is pretty good, and they're set to be one of the biggest GDP. They're set to be 5 or 4 as far as GDP going worldwide. So India is growing tremendously. And we're at the beginning of a new secular bull market. That's what it looks like, right? Over the long term. Now, over the short term, you're going to have to make some trades here if you're trading and pick the right stocks, right? That's a totally different way of looking at the market is the short term. Now, here we were looking at Teladoc for a while, right? So we're still looking at Teladoc here. The RSI is starting to get to the top. So there could be a pullback. Who knows? This RSI could go like Roku and just explode a lot higher. But anyways, when we zoom into Teladoc, it does need to get over the bigger term trend, right? It's not over the the big long-term trend, but it is breaking out and it is holding. Okay, so after the earnings report, we got a big upside move. Healthcare is set to move up. It still hasn't had its cyclicality yet. Pulled back, supported that 28, level, and it moved up today. So Teladoc is really, to me, signaling a nice setup for a swing trade, right? As long as it holds at 28 level, I'm going to call it 28, about $28 level. It should be solid here. So I like Teladoc. I'm already in one contract, 2025. I'm looking pretty far out. So I like to see that. That's what I like to see for sure. Now, SoFi had a gigantic move. Obviously, I'm not going to chase this. I wouldn't chase it, but congrats to those of you who were in SoFi. I know a lot of people did. What up, Sid? Top of the morning. A lot of people were in SoFi, and SoFi did rip higher. So SoFi is looking pretty solid there, right? And then we're some Roku's exploding again. There's so much cash on the sideline that people saw the big, mega cap tech already run up, and they want exposure to some of these other assets that still have a chance to grow their earnings. That's why we need earnings to bottom. And I think we're getting that. I think we are seeing EPS start to bottom. Revenue hasn't bottomed yet. Revenue is still, negative because the economy is negative. But as long as we get that government spending, and at some point we're going to get debasement of currency from the Fed again. Okay, so Roku, big upside move. If you're looking for, it is pulling into resistance also. Let's look at this. We got some clear resistance here on Roku, a lot of resistance. It was previous support, turned into resistance at 100. I'm going to call it 100, about 100, pretty solid whole number there. So Roku pulling into 100 probably has a pullback, and that's where you want to look for the support after that pullback. We've had it multiple times. We've already seen this, right, for Roku. And the reason I'm pointing this out, because a lot of names have already moved, right? Caterpillar is at all-time highs. John Deere, a lot of these names have moved. These are the catch-up trades. I call these the catch-up trades. You still have a lot of catch-up trades here. And there's a lot of, reward here. There's a little more risk, but that comes with anything. As long as this macro improves, I think we're okay. So it has these big pullbacks, and it rips up, pullback, rip up, pullback, rips up. So we're looking for the pullback, the consolidation, right? And then the move above 100 would solidify the rally. Of course, you want the S&P up. Of course, you want the Qs to continue higher, IWM, right? But we are seeing that. So Roku, very solid setup there. Now, I still think, as far as fundamentals and technicals goes, I really like the setup on Zoom. Okay, I really like the setup on Zoom. Zoom still has a lot of demand. They're still the staple when it comes to communications for the new digital era, and their earnings are growing. They just they had a hiccup because growth was so. It's kind of like Amazon. They had so much growth after the pandemic that, of course, the base effects were that growth wouldn't be as large. Everybody had to use Zoom, just like everybody had to buy goods with Amazon. So their earnings dropped. But I think those base effects are going to disappear because you get the peak demand in 2021, early 2021, late 2020. Now we're a full year past that, and the earnings growth should start to pick up again when it comes to Zoom, when it comes to Amazon. But obviously, I think Zoom's a better risk reward here, so I like to look at this, and it is breaking the trend. Okay, now you don't want to look at big term trends. You want to use the log charts for these. And we look at Zoom's log chart. I think this is the log chart. So looking at this log chart, we do have a break or a test. I'm sorry, we are testing that downtrend. Okay, we are testing the downtrend. So let's get. And by the way, we do have the charts on Bluetooth. If you're looking for that, we're showing everything on Bluetooth. Okay, so it is testing the trend. Now it's above the previous, right here was the previous resistance level at 71, 72. We're finally above that. My calls are finally in the money. We've been waiting for a while. But again, if I see better risk reward, if I see it start to break out and show and the overall market's moving up, I'm going to add to that position for Zoom. But Zoom is looking nice. We do have earnings coming up. So that is to be cautious. You should be cautious during earnings. The market could literally pull back, but I'm looking a lot further than that. And so far, we're starting to get some of these risk assets explode right after earnings, right? So August 22nd will be, you still have a lot of room before earnings come, right? And we'll know where the overall market is headed at that time. So Zoom has a lot of promise there. In my view, The 95 level, somewhere between 90 and 95 will be the next resistance. And then after that, 125. And hey, let's say we're 6 months into the cycle and the overall market is grinding higher. Well, Zoom should be much higher than that. We should get more demand into the economy. And especially with this AI stuff, they should be announcing some more AI tools also, which, yes, it's a buzzword, but hey, I'm going to leverage that for my trade. I want to see that. I want to hear more AI stuff, right? I want to hear if it's a real use case, if it's something that could be a real use case. Now, next you have Oracle, right? Just looking at a couple swing trades here. Next, you have Oracle. Now, Oracle is wedging. This is a big AI play, and this is a cloud. So it's kind of the picks and shovels, you could call it. Not exactly like NVIDIA where they're chips, but Oracle is wedging pretty hard. This looks exactly like NVIDIA earlier in the year when it first gapped up, right? It had its big gap up. So this is NVIDIA, had that big gap up, and you obviously got the gap up and you got that triangle, or you got the flat wedge, whatever you want to call it. You saw the flat wedge on NVIDIA and it broke out of that flat wedge. It never dropped and filled the gap. We're seeing the same thing, or I'm seeing the same thing on Oracle. Okay, same thing. You get an even bigger wedge too. So if Oracle can break out of this downtrend, we should see a lot of upside here. Probably above 120. Probably needs to hold above 120, right? Your stop is below 113, maybe. Very nice setup though for Oracle there, and then obviously you have AMD with the gigantic wedge, right? I know I got this thing marked up like crazy. Let's take some of this off, but you got the gigantic wedge on AMD, and this is a continuation play. So we look at the moving averages. We're in a very bullish trend. The problem is we are below the 50-day moving average, so there's still a lot of weakness. I think you need to get above 117 and hold on AMD. But that's a big wedge. It's likely going to wait till earnings, obviously, which come tomorrow? Is that tomorrow? We get earnings tomorrow? We'll go over that. What do I think about Twitter turning into X? Yeah, we'll go into that. It feels weird. It does feel weird seeing Twitter. What up, Dimash? Shout out Dimash. It does feel weird seeing Twitter, my Twitter now say X. I kind of like it. It's black. I like the black, background, not because I am black, but I do like the black background, right? It's pretty unique. Also, I think Elon's gonna leverage it, right? Leverage Twitter to increase the value of his other businesses. This might take some time. It's always like, okay, Elon's always making some stuff up. But dude, Elon's a smart guy. He's looking much further ahead. We forget that he did, work with PayPal, with Peter Thiel and PayPal, and he's looking to build a payments network. I think that's what he's going to turn X into, is a global payments network. He's already talked about this. So what do I think about turning Twitter into X? I think it's about to become a fintech slash big business company. Who knows? So Twitter, I'm not interested in the stock. I'm not interested in buying X, but I'm interested in seeing what they actually do going forward, and how they handle that. So anyways, AMD, big giant wedge. We got to wait till 116. It's not in play yet. I think the market needs to see the earnings picture come out before we really start to rip higher. We still have some big earnings. You got to wait till Apple's done, right? We got to wait till we see Apple earnings. So far, the big mega caps are beating expectations. Even the other names are beating expectations. I think we have Caterpillar coming tomorrow too. We got Caterpillar tomorrow. So Caterpillar at all-time highs, right? It could gap up. I think it's going to keep going. Caterpillar is a pretty easy read. You got fiscal stimulus coming into the economy. Caterpillar is one of those construction companies, and you have a lot of construction builds for residentials, non-residentials. You have a lot of manufacturing that needs to be done. We're onshoring a lot of the manufacturing or supply chain away from China into the US. That's one of our government mandates. And that's one of the reasons I'm just extremely bullish on the market, because a lot of government spending has to go towards, securing the supply chains over time. And that means more build. That means more technology. That means more money, more spending into the equity market. That's what I see, right? And when it comes to investment, that's going to FOMO in. Market psychology is, oh, that's where the money's headed. Let's go, right? You're chasing big money. Who's going to win? A lot of people will win. There will be losers also. There will be a lot of losers also. And but so far, Caterpillar, John Deere, or Deere Company, right? Those are some staples. Those come front of my mind right off the bat. Boeing, a lot of industrial spend. I'm not interested in these for me personally, but I keep a track on the charts because stock prices in general are leading indicators to the economy. They lead the economy, right? You don't wait till something is done. You don't wait. You bet on it first. You invest in it first. That's what risk is, and with the expectation that you appreciate in value. So stock prices lead the economy, which is why when we dumped in October of, we dumped all of 2022, and then we had a recession, and then we bounced, right? And because the market saw, okay, the recession's done, liquidity's coming back in, the government's going to start spending, blah blah blah. Same story. The Fed is tightening rates, but they're at the end. They're near the end of the rate hiking cycle. That turned out to be not true. They kept hiking. They are still hiking, right? They're still hiking, but you got global liquidity coming into the market, right? Where's that global net liquidity? You got this global net liquidity from September, peaked out in January, coming into the market. And so that's going to push stocks higher because it's literally liquidity. Now, real superpower is going to be that currency debasement. So we keep our eye on the Fed's balance sheet. We haven't seen it move yet, but when the Fed's balance sheet starts to pick up again, it's definitely going to be wave two FOMO, but we're not there yet. We're definitely not there we're not to the Fed's balance sheet going up. And let me just add that on here so you guys can see. If you are on TradingView, you just literally type in Fed balance sheet, I believe, right? Don't tell me I lost it. Actually, you know what? It's called something else. I always forget. I can't remember what it's called. Fed balance sheet. What is it? I think it's cow. What is it? I can't remember. I cannot remember what it is, but I'll have it on here next time. Fed balance sheet and the Fed's balance sheet, just the U.S. central bank liquidity, right? Once you get that come into the market, then it's on from there, and it's not inflationary because it goes to the banks first. It goes to the banking sector first. It doesn't go straight into the economy. Banks are still tight when it comes to rates, right? These rates are so high that's the reason why the housing is kind of struggling because rates are too high. So people are not going to borrow loans and pay exorbitant, extreme interest rates. They're not going to do that. But when you get cash into the banking sector, they take that cash and that's going to pump more liquidity because that means security, right? That means the more liquidity you have, the less likely you are to default, the more likely you are to be able to loan more to those who can actually borrow and afford to do it, like Apple, Amazon, Google, big tech, Caterpillar, whoever it is. They can still take big loans out for their growth. And trust me, big mega cap tech companies have take a lot of growth out. So in general, we do have financial services moving up. Look at the PayPal, PYPL. That thing got smashed. And this might be a good catch-up trade also. I haven't really looked at it. I have a friend who's looking at it. But PayPal looks pretty sharp to move higher. Look at this. Look at this chart. Check this out. PayPal about to break. As a matter of fact, it might be breaking. Is this the log chart? Dang, this is the actual log chart. You look at the regular chart, right? It looks like it's bottoming out there at that 66 level. So PayPal looks like a very nice trade. I've never been a fan of PayPal, but so I don't really know the fundamentals. Like I get hyped out when I know the fundamentals. I don't know the fundamentals, how good they are. You got a lot of competition with Square, XYZ, right? But once PayPal, oh yeah, PayPal is definitely breaking out. So you have a catch-up trade here on PayPal. I'm not sure what the options chain looks like, but it is breaking that downtrend, and it is breaking above. I'll just use this. It is breaking also above the previous or the local resistance level. Okay, right there. See this resistance level? It consolidated for what, 2 weeks, broke above that. So you're getting movement in the market. PayPal. I'm gonna have to add that actually. Let me add that to the toolbox because PayPal definitely is showing some strength there. And even if it just slides right back up to 100, that'd be a nice trade. Right? Financial services catching a bid here. Now, let's move over to the overall market though. Like on the macro, it is Monday, so let's take a look at what we're seeing here. Do you have any questions, thoughts on CRH for long term? Let's see what CRH is. CRH. Whoa, very nice wedge. So this had a nice breakout. This thing is pretty overextended right now. But that was a nice breakout there for CRH, right? Earlier in the year, perfect wedge. Let's see where it's at when it comes to the moving averages. This is the daily chart. It's pretty, yeah, it's CRH is strong. Now, I would never chase this because it's up too much. This is on a technical basis. I don't even know what they do. I'd have to do a little more research to see what they do. But if it pulls back in a 54.50, that seems to be the previous resistance there. 54.50 for CRH could be a nice bounce. If you get a big market sell-off, which I'm actually expecting because that inflation print should come out kind of hot next month, and earnings could, pull back, or who knows. But if we do, when we do get that big pullback in the market, then you go look, okay, CRH, can we find support at this level? But right now it's overextended. I would never try to chase this. If it's for a long-term hold, you still want to get a good entry on it, right? So I wouldn't chase it. I would wait till it pulls back. Now, what do they actually do, CRH? I want to see really quick what this company is. Maybe you. Oh, building materials. Okay, so this is a pretty rather big market cap, 44 billion. Okay, that's a big company there. And it's building materials, and no wonder they have a bid because they're a builder, right? And you got to upgrade in January. Not sure. So yeah, it's a builder. Okay, interesting. In Ireland and internationally. By the way, Ireland is leading. Ireland is actually leading it's leading the Europe area, the euro area, all of Europe in GDP right now. Ireland is recovering a lot faster than than all the other euro countries. So hey, if this is based in Ireland, it's breaking out a lot more fiscal spending. Looks solid there, man. Looks pretty solid there. Let me just check the weekly chart really quick. Oh yeah, nice breakout of all-time highs. So this is breaking all-time highs, and from 2007. So this thing could definitely run. Nice. Let's see what else we got. What do you expect for AMD earnings? Let's see, AMD earnings. I want to hear guidance. I want to hear what their guidance is going forward. Are they getting demand? They also have this mega chip, right? That's probably going to get the stock going. They have a new mega chip that has been talked about. Maybe it's all hype. If it's for real, if there's demand in that mega chip, then I expect AMD to break out and pretty nasty. I mean, this should be at all-time highs given the chip sector, the way it's been moving. Nvidia should already be at all-time highs, right? Um, it's just that I'm sorry, AMD should be at all-time highs like Nvidia, but Nvidia has such a strong hold in the chip sector that there's not a whole lot of believers, but I still think there's a catch-up trade ready to be made from AMD and a continuation in Nvidia. So here's Intel. Intel still pretty slow. This is why I don't really like Intel. It's a slow mover. If you want slowness and safety, less volatility, then you got Intel, right? But if you're trading options, you want that thing to move. So Nvidia again, still just consolidating higher. It's in that big trend. It is pressing. It is Nvidia right now is pressing the bottom of the trend. So it's pressing a new breakout. I see Nvidia start to press a new breakout. So we're looking at the cues for that. We'll keep our eye on the cues to see where that goes, where that heads. 90% of the U.S. roads use CRH suppliers and built. Okay, cool. Yeah. So CRH should be a solid trade or a solid investment. Nice little asymmetric investment. There's too much spending in the U.S. for some of these things not to go up. They will go up. So that's a good pick. That's definitely a good pick there, depending on how you enter it, right? Appreciate the love, Dimaj. Gold. Gold. Let me see what else we're looking at. I'm kind of a little behind on some of these messages. Fed bids for 3-month. Why was there such a big dip in the market today? We didn't really have a big dip in the market. We can go down to the 3-minute, 5-minute chart. No, there wasn't really a big dip in the market today. You turn on the pre-market. No, we didn't have a big dip. I mean, market volatility is normal, right? Like for if you're looking at S&P 500, normal volatility is going to be like 0. So if you go to Finviz and then type in SPY, what you want to do is go down here to the ATR, right? The ATR bottom left-hand corner. And the ATR is the average true range. Just for some of you guys that are new, the average true range is telling you how many dollars the S&P 500 or SPY is going to move on average. So if it's within the ATR, it's not really a gigantic sell-off or big move. It's just a normal move. The S&P doesn't move sideways or just grind perfectly. It's going to have outsized, it's going to be moving up and down, whatever it is. So a really big move has a lot of volume. We're not seeing a whole lot of volume right now. So check out the ATR. Also, volatility is going to give you the percent move, right? So far, and this is actually kind of elevated for SPY, but VIX is pretty low, so not really. We're seeing basically a 9.99 or 1%. So 3/4 to 1% move on average for S&P. So now you go look at S&P and you want to measure, okay, well, from the highs, let's go down to the lows. We've seen a 0.36% move, so it hasn't even hit its actual volatility range yet. So S&P has not made a sharp move, by the way. It's not making any sharp moves yet. Now, if you're talking about an individual stock, well, yeah, SoFi, they beat earnings, right? You don't want to gauge the overall market by SoFi, though. You want to gauge it by the SPYs, the Qs, maybe the Dow, maybe the Russell, which are small caps. You also have micro caps. You have a bunch of stuff you can look at. You can look at ARK grinding higher, but yeah, no big move yet, man. Gold, GLD, man, everybody loves to look at gold. Hey, gold is trending a bit this morning. Big sell-off, starting to come back up. I just think gold is boring, personally. I think it's really boring. But it is setting up. What you want to see for gold. So I'm taking a look at gold here. What you want to see for gold. I don't know if this is the best ticker for gold. I know there's gold futures. Maybe tell a better story here, but it is showing a little bit of a descending pattern. So it needs to break out of this pattern above what, 183.50. Probably 183.50, somewhere around there. And then it needs to get above the prior resistance that we've been seeing at 184. So somewhere between 183.50, 184.30 is going to be the breakout for gold. It sort of looks like gold is giving us a reverse head and shoulders, which is very bullish, right? There's your shoulder, there's your head, there's your shoulder. So it does need to break above 183.50 and then 184, maybe consolidate or pull back and hold and then go higher. So there's your gold trade. If you're looking for gold on the longer term, if you're talking intraday, I can't help you out with that. That's way more complicated in the short term for the intraday. I can, but it's day trading is much, intraday short term trading is much more difficult to explain. There's a lot of factors there. Okay. Robert Jenkins. Oh, what up? What up, man? What up, Robert Jenkins? What are you trading today? Pairs? Trading those what is it? DX, or who you trading? DXY, British pound, Japanese yen? I got the Forex going. What up, Hassan? Yeah, oil's pumping pretty good. We talked about oil earlier. Oil, bringing the risk to the market for sure. I don't like it. I don't like it because it stalls me out a little bit, right? But we are headed. So we got the charts that Big Man's coming on SPY. We are headed for the 82 level though. So 82 to 83.50 is the huge resistance, is a big resistance level, right? And maybe we're overextended. Let's look at the RSI, right? Now this is wishful thinking because we're like, oh, it has to come back down, but it is breaking a big downtrend. It is at the top of the RSI. So the last two times that oil hit the top of the RSI, it came back down and we're right back at the top of the RSI. So this could just be a relief rally from, the suppression. Maybe not. I don't think it's a real sustainable rally, in my view, because manufacturing activity is still in recession territory, which means there's not a lot of demand. You're not getting this outsized demand for energy yet. It's not there yet, right? It's just not there yet. Maybe by September, maybe oil pulls back to 70 again, and then September comes around and the manufacturing PMIs recover and it goes right back up. Who knows? So I don't think this can keep up, but it's definitely going to factor into CPI going forward. Definitely going to The cha-cha in the market about the about to happen. What about hyperinflation? Everything expensive? Yeah, I don't see that. No hyperinflation. No chance of hyperinflation. Actually, more things are disinflating than anything. You got deflation in goods and you have disinflation pretty much everywhere else. And then you have financial services, which are actually inflated. And we talked about this on this Saturday, this weekend. And here's your inflate. And check this out. Check out homes. Like the homes that are falling the furthest from the pandemic high are Seattle down 11%, San Francisco down 11, Phoenix 8.5%, Las Vegas 9%, Denver 4.5%. So housing prices are coming down. The average home price for these big metro areas is coming down. Now, New York is still elevated. Detroit, Chicago, Cleveland still elevated. Atlanta still elevated. So people are leaving those cities and going where the prices are actually decelerating, right? And California, where's California at? California, I guess not California, but Los Angeles. Even Los Angeles is down a bit, right? Dallas is down a bit. So in general, we're not seeing hyperinflation in the housing market. That would cause a huge crash. And then looking into the Fed's PCE data. Yeah, here it is. Here's the Fed's PCE data. Looking further into the Fed's PCE data, their personal consumption expenditure, we see that you have disinflation. This is the orange highlight. You have disinflation in, let me see, there we go. You have disinflation in healthcare, housing, utilities, services. And this is over the past 3 months. They're still elevated. Don't get me wrong, but they are coming down. Healthcare is coming down pretty quickly. Transportation came down back in because you want to see things below 3%, and some of these are still elevated. Recreation services up, food services and accommodations still pretty elevated, but coming down. So you're getting progress where financial services actually moved up. All right. Now, when it comes to deflation, you're getting goods deflation negative, durable goods negative over the past 3 months. This is just the rate of change of inflation in the actual line items or the actual and you can go deeper into these items, but for the most part, we're looking at the macro here. So no signs of that. I think core actually is going to start really falling versus headline because energy doesn't include headline. Energy does not include headline, and I think we're going to see that start to play itself out. All right, now looking at what is the market pricing in as far as the Fed hiking, the market is pricing in a pause. It's not pricing in a hike yet. If we start pricing in a hike, then the market that's going to put some downward pressure on the market. But right now, 5.25 to 5.5 hold in November, right? And you have 2 months of data. This is the positive that I do like. If earnings do bottom, so if we do get the bottom of earnings, which so far the earnings reports are showing a bottom in earnings. If we do get that continuation, and you have 2 months until the Fed actually talks again, you probably get a blackout period, which means the technicals can trade themselves. No more Fed speak. You get more technicals, right? And I'm looking for the dollar to roll over to really fuel this market higher. I'm looking for that, and you're getting market breadth also. So a lot of positives. Lot of positives. Crypto has been very boring, but that's how crypto is. Crypto will be extremely strong for a couple months. You get crazy optimism in crypto, and then it's really boring for a long time. And we're still in that really boring phase. But at the end of the really boring phase comes the really explosive phase. All right, let's go into see what the actual market's looking like. Intraday. These are the intraday charts. So now we're into the trading charts, the setups. This is TOS, by the way, Thinkorswim. And check this out. I actually found this on the weekend. If you do have Thinkorswim, I found this. And what it is it's just a way to look at market breadth. So these top three here, don't look at the bottom, the top three, you have S&P. How many stocks in the S&P are above the 50-day moving average? And right now, that 0.8 means 80%. So you got a 80% there. Above the 100, you got 79%. Okay, 80%. And then above the 200, you have 71%. So this is market breadth. How many stocks are trading in the S&P 500 anyway? Trading above their 50, 100, and 200 daily moving averages. So very positive there. Very positive outlook there. You have market breadth coming into the market. Let's go to that 5-minute chart. No, not 5 minute. I'm sorry, 4 hour, because we've been looking at the 4 hour. And let's see if Tesla still is holding its those averages on the 4 hour chart. Oh, it dropped. Okay, so Tesla dropped the 100. Tesla does look bearish. Don't get me wrong. Tesla's looking very bearish in the short term. It needs a catalyst, or it needs the overall market to pull back up. This could just trap a lot of shorts, though. So I expect a big squeeze either below 255, a very powerful move, probably to about 240, 235, or we're back to the highs. So that's what Tesla looks like in the short term right now. Is let's take these gaps off. Yeah, there we go. So a lot of potential there for Tesla to make a big upside or downside move. Still struggling, hasn't decided yet. Gap to fill down here at 255.80. We've already had two supports there at 255.80. Now Roku intraday had that large, big upside move above resistance, and it's trying to hold up there. But I'd wait for a pullback definitely on Roku. Tesla only weighs up. Market says forwards march no matter no. Let me see. Asan, what are you guys looking at? You guys still holding SoFi? Florida too. Florida coming down. Market can price what it wants. It's the 3 to 6 month lag effects you have to consider. Yeah, the 3 to 6. Well, I think those lag effects are being erased by the fiscal spending. Big man's coming. That's my view right now. I think the fiscal spending is pretty much, how would you say it, swallowing the lag effects of rate hikes, and causing less damage. Because this is the fastest pace of hikes they've ever done, and it's already been. They started in March of 2022, right? So we're already a year in, and we're not really seeing those effects hit yet. Maybe they hit in 2024. I do think they do start to hit in 2024 or at the end of this year. But with all the fiscal stimulus, I don't know if it really is enough. And I expect Biden to keep spending. He announced it the other day. We have initiatives, right? We have this initiative for AI. He's talking about AI to keep dominance over China, investing in AI, investing in chips, investing in semiconductors, investing in electrification. So I just don't think the rate hikes are going to make a big splash. Maybe in certain sectors they do, but overall, the macro overall, I don't think so. If you weren't getting government spending, we'd definitely be in trouble. Like, but you're getting, Biden is spending a lot of money here. So Roku is setting up though, big wedge there for Roku. Also Rivian. I always forget the ticker. Is this it? Here we go. Rivian still consolidating. Um, I'm not a fan of the price action, but it did just move off of a PDC. So you got that move off of the previous day close, really strong support for Rivian. You likely just need the overall market to pick up. Over on the left-hand side, you have IWM. I think IWM is trying to break out. So we're going to see a small cap rally pretty soon. Advanced decline for stocks, positive. We're still positive. On the day, we're down, but we are positive in general. So IWM is picking up. Looks like that we're seeing a rotation into small caps currently. Rotation to small caps. I'll be right back. Hold on. I got to use a little girl's room. And we're back. All right. So yeah, throw out some tickers if you guys want me to do some TA with the tickers. Um, because there's a lot of swing trades. Like I said, I think swing trading is back, and I think we have a lot of room to go here. If not, then we can take a look at some articles that are coming out in. Man, Roku looks really good. Yeah, Roku looks really solid. I don't know if there's real volume coming in there. Like on the right hand side, the SPY is selling off, so I don't know how much this is going to hold. Maybe you look at ARK, ARKK, and you want to see ARK hold up because Roku's such a big is such a big holding of ARKs that you need ARK for Roku to continue higher. Qs are getting smashed against that resist. This is what 1, 2, 3, 4 times the Qs got rejected at this 384, 385 level. Qs might be rolling over. Teladoc still looks pretty elevated. SoFi, see what is SoFi looking like. SoFi pulling back. But I think SoFi just has more continuation later. It is up a lot. What a monster stock there. Disney, DIS. Okay, a lot of people like Disney. Here, we'll throw this on the big screen. So intraday, Disney, it looks like Disney is getting some volume here. A lot of people have been talking about Disney. Yeah, it is breaking this here. Let me move. I'm going to move myself over so we can see the whole screen. All right. So Disney, let's go to that weekly, just take a big macro view on it. What's Disney looking like? Well, it is, let me get rid of these. Clear draw set here. So Disney is in, it kind of looks like PayPal did. It's in a big descending channel, right? Big descending channel. It's not out yet, but it could be bottoming. It could be bottoming here. So what do you got? 86.50. Yeah, Disney is ripe. It looks pretty ripe to be coming, especially with the market. It's had a lot of selling pressure. So you basically have this wedge forming up here for Disney. And yeah, I mean, this is a support. This is a pull into support trade or investment with a stop below maybe 84, a hold below 84, right? For Disney. But yeah, Disney looks pretty, it's not a breakout trade for sure. Maybe you add here. If it holds, you add on the breakout. But that is Disney there. Now, if we look at the moving averages, so we just look at more momentum. What is the momentum looking like for Disney? Still has some resistance there, right? So this is the daily chart, still trying to press above that resistance. But yeah, you could play it off of 85, 84 and just wait. Dang, Teladoc is still moving up. Very strong bid for Teladoc. I thought it would fall out by now to VWAP. Dang. All right, yeah, so that's Disney when it comes to, let's see if it has support on the weekly. It still has a lot. Yeah, Disney has a lot of resistance to get through, but again, you're going to play that support. And as long as the overall market continues higher, I think Disney will be okay on a technical basis. And then let's check out the RSI. Still very low. Are you getting bullish divergence? Not exactly yet. It looks pretty even. So once you get bullish divergence, then yeah, you're probably going to get a nice move for Disney, but no bullish divergence yet. Oh man, come on. Slowing down a little bit. Disney is on my woke list for shorts from and to. Haha, yeah, Disney. January options doing great on Teladoc. Yeah, Teladoc looks good, man. I like the setup on Teladoc, and there's a lot of demand coming in too. Yo, I don't know what's going on with this. My TOS is slowing down. All right, there we go. So yeah, that's what Disney looks solid. I mean, a lot of names look really good. If I were to enter Disney, I would maybe look for a pullback and hold the support. Um, Maybe you look at the overall market, or you just get long and you just take that drawdown of 5%. I don't want to see no 5% drawdown though. I would look actually if today was my entry for Disney, I would look in the intraday. Oh, it's moving today. And it moved the last couple days. So there's buyers stepping in. I'd wait for a pullback in a VWAP or something for Disney. Let's see. And it's not even touching VWAP. And the reason I say VWAP because you get the institutions coming in at those levels. Earlier it came in and it never, it's holding VWAP, so they're buying it. Like there's a lot of demand for Disney right now, for Disney stock, especially at these levels, right? And I think they pay a dividend. So here's your here's your flag. Nice little flag pattern. Disney definitely outperforming the market. Teladoc is still picking up. Nice. So Disney looks pretty solid. Got up to I got up to $90 pretty quick. See what that 30-minute looks like. So you got a gap to fill at what, 90.50? It filled the gap this morning at 88.62. So yeah, Disney. I mean, it's a little, extended right now, of course, but pull back into 88 could be a nice little support there. You got that previous support back here for Disney. So I'd say like a pullback into 88 looks pretty good. Pull back into 88, yeah. And if it can't hold 88, 87.50, you get out, you get in again at the lows. I mean, there's so many ways to play it, but for the most part, if you're looking 6 months out, yes, Disney should be higher 6 months from now. No big recession. There's subscriber. I didn't listen to I mean, they do have earnings coming up, so maybe you wait for earnings, but I have the feeling they're gonna beat expectations. I don't know how Disney Plus has been going, but I have the feeling that they will. Um, oh, the Disney, yeah. Well, I mean, people might want to trade it. You think XPX can fill gap right from? Oh yeah, let's take a look at SPX. All right, so the gap on Friday at what? Yeah, 45.4537. Oh, on Teladoc, up 30%. Um, if I were you, I mean, you can, but if you're in January, give it a little more room. Give it some more room. I'd give it some more room, let it play out. Let those shorts squeeze a little more. And you're all the way out till January, so I'd give it some time on Teladoc. Depends on your time frame. So SPX, filling that gap to the downside. Does it look like it's going to fill the gap? Today, I mean, yeah, you have that gap at what, 2, or I guess 45.37. It is supporting PDC, so if it closes before, yeah. I mean, I really don't know. I really don't know because you have earnings. Like, you have too many catalysts in the way. Tomorrow we get PMIs, by the way, but you have too many catalysts in the way to really just look at pure price action. Does that make sense, Manny? There's too many catalysts to know. So It might not. I mean, you can see we're above the upper trend. Like this was the bear market trend that I had talked about for the last what 3 months. That I was getting that people are getting pissed at because we're in a bull market. Now we're above that bull market trend. We're about to go vertical. So we're like in this wave. We're in FOMO right now for the equities, and equities are looking better. The moving averages. Look at these bubbles down here. We talked about this before, looking strong, and then we gapped higher. So if earnings, if there's something shaky about earnings or inflation, we come back to 44. I think for SPX, I think we come back to 44. But yeah, it could come back to 45. It probably does, to be honest with you, man. It probably does at some point. Because earnings, earnings, it could be pre-earnings. They sell off first. Apple sells off, Amazon sells off, whatever. And then it fills the gap and then goes higher. So it'll eventually, fill it. But right now I can't tell if it's gonna fill or not, because intraday it's holding. So it doesn't look like it's not gonna fill today. Definitely doesn't look like it's gonna fill today. That could change quickly, but I'm not seeing it right now. Let me see. I'm double checking to see if we have anything coming in. Nah, doesn't look like it. IWM. So yeah, no, I don't know. Maybe, maybe not. Apple shows disappointing earnings. Do you think it'll cause the market to tank? At this point, um, yeah, I think so. I think so. I think if Apple has disappointing earnings, then it could cause the market to tank. I mean, it's Apple's is bigger than IWM. It's bigger than all the small caps. So, you know, if I had a bet on it, if Apple sold off, it brings down the market if they had bad earnings. Unless guidance is higher. If they're guiding higher from China or whoever else it is as a multinational, if their guidance is up, and they talk about their new technologies being used by businesses, maybe not. So you got sentiment, and then you have the hard numbers, right? You got top line, bottom line revenue. Is it going to be? I think they still beat top and bottom line revenue because the estimates are so low. But the guidance is going to be huge. Are they guiding higher? Is their forward PE lower, right? So Apple's going to really, it's really going to depend on that. And then plus you also have, let's see, what is Apple looking like? If it does, it probably just pulls back to support to 184, 185. Pulls back to the all-time high. So very viable. It could happen. It's going to depend on earnings, like I said, overall earnings. I remember in 2018 when Apple came out with earnings, and they actually beat earnings, and the market still tanked. So I wouldn't say it's just solely going to be off Apple. I'd say it has to be a combination of some macro and fundamentals taking place. And maybe that catalyst is like if Apple has bad earnings and oil breaks over like 85 by the time, yeah, I think the market's going to sell off because inflation expectations basically start to rise. And then at the same time, you have Apple volatility coming down. So I'd be worried. I'd be a little worried about that. I'd be a little worried about that. So yeah, that's Apple. Now Meta, the crazy thing is Meta had that 14, was it 14 or 11 billion in free cash flow? I just don't think big tech's going to slow down. I mean, they can have a pullback, but as far as going back into a downtrend, I don't think so. Google had that nice gap up. Amazon has been at this level for 3 years. So if there was one bet that would be nice, now Amazon's not as big as it used to be, the actual price for options, because the bigger the stock price, the more juicy the options are, because you pump the delta, right? But Amazon's no longer there. Amazon is however, it looks like it's forming a base here. This is the weekly chart. The moving averages don't look good. Don't get me, it looks bearish, but that doesn't give me enough information. I don't think it matters. It is popping off that 50-day moving average, so Amazon does look pretty nice. And I haven't kept up with their technicals. I'm sorry, their fundamentals. I don't really know what's going to move them other than AI. We'll see. I mean, Amazon AWS is still their biggest moneymaker. So it's going to come down to guidance for AWS. Teladoc still moving up. Teladoc now at 30. Holy smokes. No pullback for me. No pullback for me. So that's Amazon. Netflix had that pullback. Netflix is making better progress than Tesla though, for sure. Let me get rid of this. This is too much stuff. Clear draw set. Yeah, let's get rid of this. And then Roku is still forming that wedge intraday. So if you dare, I used to trade Roku back in the day. The only problem with Roku right now is that the overall market is not strong. So you don't have a whole lot of faith. It could just break down. And then Walmart buys Tiger Global stake in Flipkart for 1.4 billion. So you have these acquisitions happening. That's a lot of good news there. Flipkart. I don't even know who that is. Morgan Stanley upgrades Adobe. Big market drivers. Okay, let's see. What are they talking about here? This is okay. Yeah, this is today. So we had a little article today. You got a Jeremy Siegel talking. What will be the drivers for the rest of the year? It's going to be P expansions. One sign earnings may indeed be rising in the past 2 weeks. The vast majority of earning revisions have come from analysts revising estimates upward. Some 61% of earnings revised have been higher, while 31% are lower. So yeah, I think this is the catalyst here. Is earnings revised higher because we're beating, right? Big tech is well, not even just big tech. Also, whoever is going to benefit from the fiscal stimulus is also beating expectations. Now, this is the wedge on Roku right now. This thing is wedging pretty sharp. Looks like it wants to go to 100. And you get that nice support off of VWAP too. Nice VWAP support there. Let's bring this down. We don't need to see all that. So, looks like this is trying to press the breakout currently as we speak. Do you get volume here? Let me pull up this volume a little bit. A lot of red volume on that one. False breakout. So Roku with a nice wedge pattern. I think you want to go to the 3-minute chart though for this. What pairs do I trade? Yeah, Robert, what were you no, I was just saying, what are you trading right now? What are you looking at right now? You trade the Forex, right? Hey, on YouTube, don't forget to hit the likes. Don't forget to hit the likes. Get me Help me out with the algorithm, get some more commentary. Trying to grow the channel. Subscribe if you're not already subscribed. Okay, so let me see. Would you add to your Rivian? Hmm. Would I add to Rivian? Let's see. No, I definitely don't like this setup on Rivian. I don't like this ascending channel. So the question is, you go back in history, do a little bit of back testing. Can Rivian break out? Does it have a history of breaking out, forming these type of channels? It just looks very bearish. Looks very bearish. I also want to say, like, an ascending channel is usually bearish. Although you have like Palantir who can do it and still break out. You have Ethereum who does it. Open Door will do it. Certain stocks can do it. So I don't know if Rivian can. But you had this, I think last time. It's not like a big ascending channel, but you did have that happening last time. Let me go to the max D. I want to see if there was ever. It doesn't have a whole lot of history, but let's see. Do we ever see that here? Usually they broke down. I don't like the price action on Rivian. I'll just say that. This might be more of a support play where you wait for it to find support. It's probably my view on there. You're looking at Canada, JPY, and the Great Britain over JPY. Okay. Everybody's looking at JPY. I think Japan, something with yield curve control in Japan. I don't know exactly what they're doing. They're doing some type of yield curve control. I haven't figured it out yet, but they're trying to control their yield curve, whether they buy more JGBs or either they're buying more JGBs or they're not. I mean, but that's a little outside my purview right now. I got to see a little more clarity. People are just talking that they're going to continue, and they also have the highest inflation they've had for a while. So who knows how that's going to work out? They might have to be forced buyers again, as usual. Okay, so one sign early may indeed be right. Now, this is what could cause the market to continue to break out here. In the past 2 weeks, the vast majority of earning revisions have come from analysts revising estimates up. That's what I think does it. And also the soft landing. So the Fed Chair Powell admitting last week no longer modeling a recession. So we talked about this this weekend, how he's no longer looking at recession. There's no base case for recession now, according to the Fed, the FOMC, and they're actually seeing a lot of progress there on CPI, other than oil going up, pushing up a headline. And that they do have a shot at returning to 2% target without high unemployment. I think that is true. I guess that's about it. Just more commentary on earnings. It's pretty much the same thing we've looked at multiple times. A lot of people think the rally cannot last because what? Hmm. Dang, sounds like there's a wreck outside my house. Well, that's Roku right there. Roku's still wedging. This will be interesting if it plays out. I don't know. The market's weak. It is weak today. Tomorrow we do get ISM PMI, so we're gonna see if the manufacturing sector in the US can recover, or if it is starting to actually recover. Last report we said that we saw the new order start to pick up. So if that's still the case, we should see PMI start to recover a bit, or maybe just stop going down. Right? Maybe they just stop going down. But durable good orders month over month had a big move from the previous month. So we talked about this. I think it was last week. Durable good orders jumped significantly, biggest move in 3 years. So that manufacturing sector could be actually recovering. And when you get the PMIs recover or the ISM, that's the business cycle right there. That thing recovers. No recession in sight. We turn into an expansion. Services are already expanding. So if you get services and manufacturing expanding, maybe not till later this year, it's back on. It's just we're back now. Maybe we stick with higher rates, uh, and maybe we do stick with higher rates. Will we see Tesla break out of that 270? It's key. It is. It is key, man. Tesla is struggling. I think it needs a catalyst. It ran up a lot. I still see a lot of strong buyers though coming in Tesla. Every time it sells off significantly, the buyers have been stepping in pretty strong for Tesla. And I think the 255 level is solid. Let's see, we need to get above yesterday or Friday's highs. Friday had the big upside move. So we need to hold 270 is the level. 270 is the level. You see that resistance, pretty clear resistance at 270 multiple times. And then when I look at the 4-hour chart, actually, let me take the pre-market off. It's it's a little too noisy. It's a little too noisy. There we go. That's a little clear. So yeah, it's pretty. I mean, it's pretty evident that there's people, investors, whoever they are, stepping at these lows. 255 for Tesla, and then it's pretty clear that resistance is 270, or at least you get momentum around 270 to 274, 275. So that thing will just keep tightening up. And hey, a break to the downside is going to be nasty. Break to the upside is going to fill that gap to 291. So it is holding higher though. We're holding a little bit higher. Maybe you call it a wedge. Not sure exactly what a monster stock. Yeah, Tesla's a monster. It ran up. It should have sold off a lot more, to be honest, given the how much it ran up. But I mean, on a technical basis, but on a fundamental basis, they beat top bottom line revenue. Their earnings were actually really good. Their energy sector, energy storage is starting to go, and energy storage could be bigger than the actual car company. So it's still in the beginning stages of growth. And we should be hearing maybe later down the road who's trying to license FSD. That's another revenue stream. So it comes down to the overall market. Can the overall market keep this up? That'll bring Tesla up just naturally without a catalyst. Once you get a catalyst, now you're talking big upside move, right? Now you're getting big upside move if you actually get a catalyst. Look at Teladoc here, man. I want to just take a look at Teladoc. Teladoc, really nice technicals. You had that after hours big break after hours, or not after hours. You had that earnings after earnings. You had that big break higher. And this thing's been selling off since 2021. I think it was February of 2021 or March. So it's starting to recover from those levels. I remember when I bought it at 29, I was like, man, it was at 300. I bought it at 29, went nowhere, and then dropped. And I was like, holy smokes, 2 years later, still at the same level, but the fundamentals are improving. They're using AI. They're using Microsoft's AI. I mean, I used Teladoc the other day, right? I used it the other day. It's quick. You just literally, it's really, I think it's innovative. I think this actually has juice here. It's not just, jumping into a stock, but I think the fundamentals will improve because of the secular adoption of less friction when it comes to healthcare. You don't want all this friction. You have to go here, you got to go there. You want less friction. If you're just getting checkups or you just need medicine, you don't want to go into a doctor to get some medicine. You want to be able to do that over the phone. But obviously, if you have a real medical condition, yeah, that's totally different. But they do a lot more than that. So we're talking records, using AI for records, and just a totally different type of service here. This is the remember we used to have Blockbuster? This is the Netflix of healthcare, bringing it to your home. No, I'm just kidding. But anyways, yeah, Teladoc looks solid. I'm looking at that price action anyways, and it found a bottom here around 28. It's been here a couple days. Now it's moving off. It broke the flag and it's moving off that level. Going to retest 3040. So hey, if it gets above 3040 and holds, so if you see a hold above 3040, then you know, and I might as well just mark this. If you get a hold above 3040, let's see, I'd say this is sort of the zone you want to see here, 3040 to 30, probably the 40-cent zone around 30. If it holds that, it's going to move higher. If it comes back down, then you're looking for the wedge to form. You're looking for the wedge. And this looks a lot like Teladoc is starting to look a lot like is it Zoom that did the same thing? I think you could call it Zoom. Zoom had but it didn't have earnings. Zoom came up and it's been getting rejected, but it is forming a wedge here, which I really like to see on Zoom. See the wedge? Really nice wedge coming from the lows. So Zoom also has that wedge, and these things have a lot of upside. They have so much price to go higher, so much room to go higher. And then Roku obviously did the same thing, right? We saw this with Roku before it broke out. It had the big move to the upside, consolidated. The more you consolidate, the bigger the breakout. Now this thing shook me out because it broke down. It actually broke down because it moved before earnings, and then it just gapped up right above the levels and broke through all the levels. So you could see that with Zoom possibly. I mean, I don't know. We'll see how it plays out. But that would have been the entry, is the break over 77. That was the previous resistance level for Zoom. And then we see, do we got okay, yeah. And then who's the other play? These are the ones I'm focused on here. And then just really getting extend to the right. Oh, no, 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 not that. Really getting a AMD, see what AMD can do. Hmm. Oh, that's weird. But yeah, AMD needs to reclaim 117. It needs to reclaim 117. Maybe even 120. Yeah, Roku's starting to break down. I didn't think it would be able to hold because the overall market is rolling over. So Roku having some issues there. Now, on the upside, one thing to keep in mind this week is there's so much cash on the sideline. Wall Street is the most bearish they've ever been in history, on record anyway, when it comes to the second half. So they're betting on a second half recession, maybe inflation comes back. They're betting on that. If it doesn't come through, there's going to be and also they're betting on earnings just dropping out. So if it doesn't come through for them, for those people who are bearish, then you're going to get that FOMO coming in, wave 2 FOMO, right? I don't know how long we can keep saying wave 2 FOMO. I think you need earnings to finish. So we got about 2 more weeks. I would say mid-August is we'll see if this wave 2 FOMO is coming out. You have the end of earnings, you have the next inflation print, and then we'll see what pulls more weight, better earnings or stagnant inflation, because I don't think inflation is gonna be able to drop as fast. Maybe core does. I think core does. That could also be a catalyst too. Core could be the catalyst also. Look at Tesla just ripping right back up above that level. So yeah, Tesla's strong. Tesla's very strong. When I look at the price action over, day to day, ARK is weak right now too. So you got ARK is weak. You got the Qs are also weak. Is the SPY strong or something? SPY's weak. So what does that tell you about Tesla? What does that tell you about Tesla? That tells you the buyers are stepping in whenever you get the overall market weak and Tesla start to outperform. That's usually a signal that there's some buyer in the market coming in consistently. Okay, here we go. Goldman Sachs. Better than feared is key to investors' takeaway. Now that 48% of S&P 500 firms have reported Q2 results. However, investors have not rewarded stocks posting positive surprises. Oh, okay. Yeah, that's true. He's basically, Goldman Sachs is saying that investors have not been rewarded for stocks posting positive. Yeah, that's true. Look at Tesla, Netflix, positive went down. Microsoft, I don't know, where's Microsoft at? Maybe they're positive. I think they went down too. Google went up, Meta went up. So that is partly true, but we got to wait for the whole cycle to finish, right? And there's always the sell off, before, and then the recovery. So we might get that recovery also coming back in. And there's just a lot of people off sides. The dollar trade is starting to come off at the same time. All right, I'm gonna double check crypto. Like, crypto's so boring right now. Like, this is when you take advantage of something, but crypto is pretty boring currently. Oh, you know what? There was a tweet that I want to go over. We'll finish out with this tweet. It's about tokenization. And I think it's a really powerful. That's crazy how it moves my screen. It's a really powerful outlook going forward. By the way, did you guys watch the UFC fights this weekend? Anybody watch the UFC fights? You guys don't watch fights, maybe? Yeah, you guys probably do watch fights. Oh, you saw the boxing match. Went for Crawford. So there's this tokenization tweet. Maybe I'll do it tomorrow because it's a long thread, but it's basically highlighting that the main thing here is that total tokenization is expected to be at 10% of GDP by 2030. It could be as much as $68 trillion, the tokenization space in general. And this is tokenizing homes, bonds, so equity prices, bond prices, real estate, tokenizing, unlisted equities, energy, gold, commodities, whatever it is. So tokenization of global illiquid assets estimated to be around 16 trillion by 2023. And this is a source from World Economic Forum. So remember, Larry Fink is part of the elite, I guess you could say. I don't want to just say his name, but they are calling for the tokenization of everything, which increases productivity in the market in general, right? Productivity, cost, efficiencies, that's what it does. So tokenization is huge. That is the crypto thing, right? Crypto is about tokenization in general. That's one part of it. And so, this theme that just keeps rolling on, who's going to benefit from that? That's what you got to ask yourself. Who's going to benefit most from tokenization when it comes down to it? And so Larry Fink did say the next generation of securities will be tokenized. He said that, I think last year. and he's reiterated it again. So when we talk about tokenization, we're saying tangible and intangible assets, furniture, buildings, machinery, cash, vehicles, computers. Those will be tangible assets that can be tokenized. And if you're talking intangible, you're saying patents, brand values, logos, copyright, trademarks. So like literally Apple brand, all those things can be tokenized. So it's almost like a whole new layer upon everything that has value. And what if Chainlink, right? And I'm still thinking Chainlink is going to be a big part of this story, is going to capture a lot of this value because of the Oracle network, because of CCIP. So this is a really big. I'm gonna dive a little deeper into this, just because tokenization is a new concept, right? It's not easy to understand, so you want to be able to simplify it. Um, so 18 things that'll change how business is done. I'm gonna just go through this. I'm trying to find the simple stuff first. The use of smart contracts, automating transactions when present conditions are met, removing the need for a third-party intermediator. Everybody wants that. Fractionalized ownership. So imagine owning real estate. So right now, the real estate process is so strenuous, right? You have to go through all these obstacles, but in a world of tokenization, you don't have to. Let's say you like a certain property, you could just buy a portion of that property in a fund, kind of like a money market fund, but it's more tokenized. So let's say there's a real estate property you want to own, apartment complex. Well, you and your buddies, don't have the capital to, you don't have $10 million to pull together to borrow from the banks. So instead, you could have 1,000 people actually contribute to that, and then get their own. The fractional ownership part gives you a fixed income, right? You're almost retaining, you're almost getting a fixed income through the process of tokenization. So assets can be divided into smaller, more affordable portions, opening opportunities for more investments. You look at stocks currently, you can't really own a portion of a stock. In some stocks you can, not all of them you can, but imagine owning portions of real estate, of whatever it is, maybe a portion of would it be a wine collection, an art collection. You can own a portion of it, and then let's say it gives you a 5% yield. Well, you're gonna, depending on how many people are in there, you're gonna get a percentage of that yield, right? That's gonna bring more financial opportunity to the market. And that's what tokenization does. It also brings liquidity. Tokens can be bought, sold, or traded easily, making the asset more liquid. So let's say you're earning a yield off of some art piece, right? And you can trade it. You can literally trade the yield for cash. So it's really interesting. It's like you create a bond market in itself, a US Treasury market in itself, or I guess people are unfamiliar with that, but you create a new market that didn't exist prior, that gives you more opportunity, more liquidity, and more reach. Real-time tracking. Here's the good part. Blockchains allow for continuous monitoring and verification of token movements. So you can see if stuff is real in real time on the blockchain. You don't have to trust a third party. That's the good part or the best part about it. Single layer of data. Blockchain consolidates data points, enabling efficient collaboration of data sharing. Financial inclusivity. Here's the big part. Tokens can be issued by anyone and purchased in small fractions, lowering the barrier to investment. Exactly. So more people can, instead of buying lotto tickets, they can, they can actually buy small fractions and possibly get yield off of that, or just hold it for the value appreciation over time. Tesla's still moving up. Decentralization distribution. Tokens can be distributed without the need for traditional financial. And that's the part that sucks. Nobody wants to go through all these intermediators and all this stuff. You want to be able to do it yourself. Obviously, you got to be educated on it, because but that's the opportunity. With risk comes reward and responsibility if you're going to take some type of risk, right? If you make sure the art you're investing in, you see long-term prospects for it. Maybe it's real estate. Make sure you do your research. You don't buy some real estate property or tokenize a piece of it that will only go down in value over time. Non-fungible unique tokens can represent unique assets or rights. So the whole NFT thing isn't really about art. I know everybody's like, NFTs are art. Not really. That's one aspect, but NFTs come down to ownership. It is about tokenization when it comes to NFTs, and we're not there yet. But when you got Larry Fink and you got the big, when you have the big heads that run the world, or the elite, or the global financial forum, right? The G7 nations, you got those guys talking about tokenizing everything. For one, you have a debt problem and they can't beat the debt without crashing the market. But if you increase productivity and efficiencies, you have less downside risk, which is why they want to do this. And they're also going to, there's a lot of interest in it too. Interoperability, this is where Chainlink comes in. This is why we're so bullish on Chainlink. Interoperability, tokens can be traded across any platform that support the same blockchain standards. Now, this is wrong. That support the same blockchain standards. Well, I don't want to say it's wrong, but with Chainlink, you can literally trade tokens across different layer ones, layer twos, whatever it is, and trade them across from public chains to private chains. So now you get big banks involved, right? Swift, JP Morgan, eventually they have their own private blockchains. So you're going to be able to trade tokens and assets and, all across different platforms. That opens up so much value transfer capabilities, and who's gonna actually capitalize on security, strong cryptographic techniques to safeguard transactions and prevent asset tampering. That's huge, because if you're a family office over in Australia and you want to own US equities, you don't want to depend on some broker who could literally go bust and lose all your money, right? The pension funds over there in the UK, pension funds in Australia, people who work, the middle class, they want to buy US equities. They don't really want to own their own nation's equities. They don't perform as well. So they have to go to US broker. Well, if you tokenize everything, they go straight to the blockchain. It's instant, quick, settles instantly. That you take all those risks around, and you're not paying a big fee for the transaction. You're paying a small fee for the network to keep running. So this is a huge, this is a big deal. Who knows how long it takes to play out, though? It's still going to need regulatory stuff. But when you got guys like Larry Fink talking about it, it's coming to stay. Smart contracts can include compliance protocols to adhere to legal requirements. Global reach, internet-based nature of blockchains allows participants from anywhere. Cost reduction, removing intermediators. I can't even say that. Intermediaries. Man, I can't pronounce that for some reason. I just say intermediators. Lower costs associated with transactions. So removing the middleman from taking all those costs of the transaction. Potential increase for market depth. Tokenization can create new markets for previously illiquid assets, especially with cards. People like those Magic the Gathering or Pokemon cards. You can now trade those, right? Imagine being able to trade those cards on a blockchain, so nobody could really steal from you because it's going to be on the blockchain in your name, assigned to you. So they'll probably go virtual, also virtual tokenization of that. So gaming, it goes into gaming, it goes into everything. Programmable functionality tokens can be coded to perform specific functions or represent specific rights. So it goes into governance too, where you can program governance, which is really interesting. You get into like the new era of government where you just walk into a store and you don't actually pay. You just buy what you're going to buy. And there's a smart contract connected to your QR code, wherever that is, right? Maybe it's on your hand, maybe it's in your pocket. And it basically, as soon as you walk in the store, it recognizes who you are. And when you walk out, it scans all your stuff and charges your account instantly without you having to, mess with anybody else or go through a scan process. And if you don't have the money, well, you just stole something and now they put a automatic lever or restriction on your account. So that sounds kind of, sounds a little, what is the name for it? Dark, but that's where we're headed. Blockchains operate around the clock, allowing for continuous trading and faster. And then you have the tokenization of the stock market, where you're getting now on Robinhood, you could trade 24/7, right? That's going to continue. You think Tesla, AMD are the only stocks that will be trading for 24/7? You'll have more. So it's coming. And, I think the big beneficiary of that will be partly CCIP and Chainlink. Cross-chain interoperability. This might be the new, I don't want to see might be the new, but I'm just bullish on it because eventually the catalyst will come. And then you can say, hey, I heard it from that, that dude who always runs his mouth on YouTube and TikTok. the tokenization of everything, Chainlink. Because you know what? Nobody talks about Chainlink. They talk about all these stupid meme coins, but they don't have too much. And I'm kind of glad because they're gonna FOMO into it later. All right. Anyway, to wrap things up, do we have any questions? I'll give a couple. We'll give a little time for questions. What do we see tomorrow? What's going on tomorrow? While you guys think of if you have any questions, maybe you don't. I'm gonna go over what we're gonna run into tomorrow. Tomorrow is Tuesday, so tomorrow we are looking at the European Manufacturing Index. What the heck is this? The European Manufacturing Index, and what that means is Europe recovering, right? Are we seeing any recovery in Europe? Is it getting worse? If it gets better, that's going to be very positive news. We get the S&P Global at 6:45 a.m. So this is before I get on. We'll get the S&P Global Manufacturing PMI, which really dipped hard. No, actually, it moved up in July. Okay. Why does that say? Oh, I see. Okay, so the S&P Global Manufacturing PMI is a signal of the business cycle. The business cycle is what is still trying to bottom. Once a business cycle bottoms out, asset prices go much higher from here. They go much higher from here as long as inflation is tamed. Okay, it's going to be as long as it's tamed. And Powell already said if we are nearing 2%, we're going to pause and we're going to cut rates. We're not going to wait till 2% because that's a lagging indicator, which means you're going into deflation. And deflation is not good for companies because they're losing earnings, right? So Roku looks pretty nice right now. Anyways, yeah, we're gonna track these out. Then you get the ISM at 7 o'clock a.m. I'll come in 30 minutes later. Job openings tomorrow. That's the big part of what the Fed is looking at is job openings. We want job openings to keep falling to so that we don't get wage inflation. So we want to see job openings. The expectation is 9.5 million. Last time we were at 9.8. So we'll see, right? We want to see those job openings slowly fall, not drop like a rock, but slowly fall. Then we get ISM manufacturing employment. So we'll see how employment's doing. More jolts. I'm sorry, job quits. ISM prices, that's going to be big. New orders. So this is what we looked at last month. We said, I think it was July 1st, ISM new orders, they picked up month over month. If they pick up again or they stay where they're at, we know manufacturing is recovering. Therefore, the business cycle is turning. Therefore, GDP is turning. Therefore, no recession. The soft landing becomes more prevalent, or no landing where it's just we're cruising from here. We keep expanding regardless of the hikes, right? If something breaks, we look at the Fed's balance sheet. Does it step in? Construction spending. We have a lot of good data tomorrow. We got the Dallas Fed also. Dallas region for manufacture or services. I'm sorry, services for Dallas Fed, Dallas region, and construction spending. That's a big one. So I expect that to continue to be strong because of all the onshoring from Joe Biden, all the onshoring from the White House, and all the spending in chips and manufacturing and non-residential real estate. So we have all that data tomorrow morning. We will be live. Oh, okay, we got some questions. See, nope. My fear is credit scoring like China, Florida, and Texas banned it. Yeah, credit scoring. Yeah, but I know it's a fear, like the whole credit score, but we just got to vote correctly. We got to vote. I think it's coming no matter what. In one form or another, the world changes quickly. You just want it to benefit you more than it doesn't, right? So the credit scoring will probably be here, but we already do credit scores, right? You already have a credit score. So it's not like it's new. A social credit score now, if you could think about positive or negative, there's a lot of positive and negative aspects to that. So again, hey, the world's going to change quickly in this new era. So how can you take advantage of it? You can't stop it. It's coming, but how do you take advantage of it, right? You got to be ahead, one step ahead, keep thinking ahead. And one step ahead, cause less suffering and pain in the world. Better, but we definitely got to vote smarter this election for people. I mean, the people probably on here listening to this probably didn't vote the way I thought they did. So, there's a big audience out there. All right, so that's what we got down the pipeline tomorrow, and then we're gonna see exactly how the bond market responds to that, how the credit market responds to that, how the dollar responds to that, right? How equities actually respond to that. Another big thing I totally forgot was actually earnings. Where are my? I think. See if I can access my. Oh, I guess I can't do it there. All right, so yeah, another thing is going to be earnings. So what do we have tomorrow for earnings? Some of you guys probably already know. Let's see, earnings forecasts. What is this? Check 1 2. Okay, it didn't take me out. ITC, don't know what that is. This was today. No big earnings today. Oh, on. I know some people were in on. On had earnings today. Let's see what that look. What did on look like today? Semiconductor. Oh, nice big upside move, right? On at all-time highs. So the semis. So I'm thinking SMH. You guys want a proxy for the semiconductor? If you want to just own all semiconductors, SMH is the prominent ETF for semiconductors. If you don't know who to pick, AMD, whatever, that's SMH. All right, so yeah, On had earnings. They beat expectations. They came right in line with the forecasts. Oh, no, they beat top and bottom line. So did pretty well. That was today though. You have a lot more earnings coming out in the PM. So tomorrow we have AMD. Ooh, yeah, we have a lot tomorrow. We got Caterpillar, AMD. Dang it, tomorrow's a big day. Caterpillar, AMD, Merck. I think that's a bio healthcare. Pfizer, maybe, we'll see what they have to say about their vaccines. No, I'm just kidding. Um, AIG Insurance, Ecolab, Cisco. I think those are the big ones. EA Sports. Yep. So those are the big ones. AMD, Pfizer. Although I don't really care about Pfizer and Merck that much, other than the fact that it picks up the ETF for healthcare and maybe that helps Teladoc. But AMD, Caterpillar, those look like the big ones. Starbucks, my bad. We got Starbucks too. You are not safe. Yeah, you're never safe. I mean, driving is literally the biggest risk in your life. So nothing is safe in life. This is why you got to stay ahead. Big Brother 1984. Yeah, I feel you. I'm shorting Pfizer from 55. Yeah. Yeah. So those are the big ones. Merck. Advanced Micro Devices, Caterpillar, Starbucks. Those are the big ones. Starbucks is going to give us some. Man, I've been at Starbucks getting those. I've been trying those cold coffees, those nitros. Those are pretty good. I got to start making my own though. Yeah, that's it. Other than that, we got a nice little morning there. We'll see how the market moves tomorrow. And I appreciate you guys joining the stream. Have a blessed rest of the day. Get your exercise, eat healthy, keep a growth mindset. All right. Appreciate you guys for jumping on and supporting the channel. Don't forget to like, subscribe. Got the newsletter if you want to read over it from last week. Got the newsletter coming in. All right, guys. I appreciate you guys. Stay blessed again. Take it easy.